Hey there, everyone. This is Tom from Wall Street Value. And today's Monday, January 4th. So it's the first Monday of the new year. And just want to wish everyone a happy new year. Thank God 2020 is over. And hopefully 2021 is going to be a very profitable year for all of us. So I want to start off this year putting together a video series of each of the items that are on my investment checklist. So there's over 30 different things that I look for every single time I analyze a business. And all of them are important. Otherwise, I wouldn't have them on my checklist. And it's easy to forget something unless you have that itemized list to go by every single time you take a look at a stock. So what I want to do here is just dive a little bit deeper into each one of those items. So the first video we're going to talk about is return on assets, otherwise known as ROA. So let's get into this. It's going to be a real quick video. So what are return on assets? It's a measure of how profitable a company is in comparison to its total assets. And it's also a great indication of how effective management is at using its assets to generate earnings. And it shows us, the investors, how well the company is going to turn those assets into profits. ROA is also a very good tool to compare against others within the same industry. We want to see that ROA is earning at least 10% annually or better. And a higher return on assets means the company is earning more money on less investment. Let me give you an example so you can see why this is important. So let's take a look at two companies. Company A has $100,000 in net income and $2 million in assets. Their ROA is 5%. But if Company B has net income of the same $100,000, but only $1 million in assets, then their ROA is 10%. Company B, although they have fewer assets, they are earning more money more efficiently than Company A, who has more assets. The better the ROA, the better the management team is at running the business efficiently. So the calculation is net income divided by total assets. However, we can go on the free version of Morningstar, and they have this already calculated for us. So we go into Morningstar, we go under key ratios, and you'll see it there. And here's a screenshot of where to find it, but let me share my screen with you so you can see exactly where we go. All right, we come up here. And let's type in the ticker symbol, which I already did. I typed in Apple, which brings us to this quote page. And under here, we are going to go right here where it says key ratios. And then once we do that, it's right here, 17.33%. Or we can click on full key ratios data, and it gives us a whole lot of information. And once again, this is under the free version of Morningstar. So we want to come down underneath here where it says key ratios, profitability, and then we have return on assets. And the trailing 12 months is 17.33. So return on assets, pretty simple, real easy to find it, but also very important for us to look at. So that's it for this video, short and sweet, and I hope you guys liked it. So if you do like the video, please hit like below and make sure you hit the subscribe button and turn on notifications so you don't miss any upcoming videos. And also leave a comment. Let me know if there's any specific topics that you do want to learn more about. And then finally, I have two links here below. The first one is to book a call with me. If you want to go over any of this investment stuff or you just want to learn more, we do offer a couple different programs. And if you want to watch one of our live trainings, that is the second link below. So that's it for today. Hope you guys liked the video, and I'll see you over the next one. Take care, everyone.